See some friends in the crowd. Thank you for coming out today. We appreciate Kai and Tarek and the Goldmesse. It's a good show for us. If you've heard me speak before, you know that I'm passionate about our business model. Our business model is, I believe, extraordinarily powerful. And it's been functioning nicely for 20 years, building a portfolio of royalties around the world. We touch nearly 5 million acres of mineral rights at this point in time. I think it's clear if you look at global macroeconomic trends that you want to be exposed to all the mineral rights that you can be. And we're very bullish on copper prices, nickel prices with burgeoning demand from a whole source of different consumption that we expect in the future, not the least of which is electrification of the transportation grids around the world. So coming back to the business model, we do royalty generation like no other company out there today, and we have for 20 years. We've sold 92 projects in the last 4.5 years, since 2018, many to some of the world's largest mining companies, as well as helping to start brand new public companies. We do this by utilizing our alpha, which is our economic geologic talent around the world. We actually acquire the underlying mineral rights by staking mining claims or acquiring exploration licenses. We'll look at the map here in a minute. So that economic geologic talent and business acumen is our alpha, and that's driven the value creation of the company over the last 20 years, dominantly through this royalty generation process where we acquire those mineral rights. We add value by coalescing the existing data, collecting additional data in the field, usually not drilling, but occasionally we'll drill a little bit, sell that on to an industry hungry for discovery opportunity for a combination of cash payments, share payments, annual work commitments that are in ground, and always a production royalty at the end of the day. To augment that portfolio of royalties that we're growing organically, which is building the base of the pyramid with long-term potential, we also buy royalties, typically at a more advanced stage, to round out the portfolio, give us greater mass and greater cash flow across that portfolio. So David Harquail, one of the founders of Franco-Nevada, the biggest royalty company in the world, once brushed shoulders with me at the Denver Gold Show. He says, "David, I want you to know, we think that royalty generation combined with royalty acquisition is particularly powerful. Way to go." And it's great to get kudos from somebody like David Harquail. At that point in time, they were not shareholders in EMX, but today Franco-Nevada is a shareholder in EMX. We're the only junior royalty company that they've ever bought a share ownership of, and they hold that stock. And when people ask Paul Brink, the current CEO, "Why'd you buy EMX stock?" he says, "We want exposure to their royalty generation." They can buy royalties. They're one of the best buyers of royalties in the world, but they don't generate royalties. I've had Pierre Lassonde say to me, "Royalty generation is a fantastic model. We're too big to do that. We don't have the right geological talent to do it, but we sure do applaud it. Glad you're doing it." Because that doesn't compete with them, right? We're actually out there creating new projects and selling them on to the industry. Third thing that we do, we make strategic investments. This is also a unique feature for a company of our size. Our strategic investing track record over the last 20 years has netted out over $60 million USD in profits. Not every strategic investment has been profitable. We've had some that were just complete catastrophic failures, but we've had some others that were outsized wins. And our internal rate of return on invested capital there is over 30% after tax. And like I said, $60 million in monies have been made that we were able to utilize to wrap right back into royalty generation and royalty acquisition, furthering the growth of the portfolio. So that's our business model. You've probably heard me talk about that before if you've heard me speak. I would like to just delve into a bit more why royalties are such phenomenal financial instruments. Royalties give you optionality on the commodity price, and we all want to be exposed to commodity prices, particularly metals, right? Particularly copper and gold, nickel. But we also want to be exposed to discovery optionality because that's where the outsized wins can come from. I'll use Franco as another example. They bought a royalty out of the Reno paper for $1.x million. I think it was $1.7 million bucks. That royalty is now paid right at $1 billion. And it's a great example of optionality. They've made a huge discovery of a new gold deposit at depth on the same property. Then the metallurgists figured out how to get the gold out of the rock that previously was not ore because it was complicated metallurgy. Metallurgists figured that out. Then the engineers figured out how to mine with steeper pit walls so they could mine deeper. And eventually they figured out how to mine underground, even though the rock quality was very poor. And ultimately, all of those aspects of optionality, engineering, metallurgy, discovery, commodity price, are multiplicative. So this royalty that at one point in time was worth $1 million is now paid $1 billion. And it's that aspect of optionality, and that optionality can come from anywhere within the portfolio. That's why you want to be exposed to a royalty portfolio. And that's why Franco-Nevada trades at 2.5 times NAV5. So the net asset value calculated at a 5% discount rate, they trade at 2.5 times that. And people, some financial engineers say it doesn't make sense. That seems like they're overvalued. And it's because of this aspect of the portfolio effect and discovery optionality. So when we sell a project, we put a bit of money into it, coalesce the data, sell it. We always build in some cash and share payments early. So we're getting pre-production payments. Right now across our portfolio, we're getting $3 million per year in pre-production payments. We're getting share payments that average over $1 million a year. And then we get stage gate payments once a resource is advanced. We just had a $3 million stage gate payment from a nice discovery in Arizona. And then the big money comes in when it goes into production. So if you're buying EMX stock today, you have the benefit of that whole portfolio having been built and those assets working their way up to the top of the pyramid and becoming distinctly cash flow. So here's the portfolio, 5 million acres around the world. We touched 12,000 mining claims in the Western US. I'll point out specifically, I know Chad's in the room, that there's a nice discovery going on here on one of Chad's properties, that's Salina. That's a silver gold discovery. And Barrick is spending a lot of money on another one of his projects where we have a royalty at Swift. They're spending over $10 million a year on that. We just love to see that other people's money being spent across our portfolio. On the whole portfolio worldwide, over $40 million in drill money. That's creating that discovery optionality for us. The Leeville mine's paying about $2.5 million a year. That's gold. We love gold today at near record high gold prices. Another example of discovery optionality is the Park Salyer asset in Arizona. That's a big porphyry copper system that we have a piece of that triggered a $3 million stage gate payment. Another example. It's probably many years before that copper comes out of the ground and we see production royalty income. But we get the stage gate payments, and that's we own a chunk of that metal in the ground. Same thing going on at Peak. That's a discovery by South 32. That is a copper, zinc, silver deposit in southern Arizona. So now let's go to South America, where the Caserones mine is our largest current cash flowing royalties, paying about $10 million a year. That's a very long-lived, multi-decade mine life, just recently purchased by Lundin. The previous counterparty was JX Nippon, very capable, multi-billion-dollar Japanese company. But now Lundin has purchased this, and we expect Lundin to be very aggressive and to increase production here, all to our benefit. Yeah, and that's copper and molybdenum. We love to be exposed to those commodities. And then on the discovery side, Diablios is advancing nicely. That's Abra Silver. I recommend you look at Abra Silver as a company to invest in. The drill holes, they just had a press release this week. More great drill holes. So that deposit is expanding dramatically, all to our benefit. Very pleased about that. Moving on to Northern Europe, we're the largest single mineral rights holder in all of Fennoscandia. We own more mineral rights than Boliden does. And we have done this organically by just being very aggressive at acquiring prospective mineral rights in Norway, Sweden, and Finland. And we've sold this off to a whole host of different companies that are exploring that ground with some really nice drill results coming from around that. It's been a productive business unit for us. The most advanced asset is the Viscaria mine. And Viscaria should be in production in 24. After it's in production, we'll pay between $1 and $3 million a year. So a nice medium-sized royalty. Moving to Balya and Turkey. We've been in Turkey for many, many, many years. And we have multiple producing assets there. Balya's one we generated. It's only paying about $500,000 to $1 million a year right now. but I do expect that to become a multi-million-dollar producer as the metallurgy of the ores are being figured out. They have had some problems, early startup problems with the mine are common. They've had some problems understanding the metallurgy. They're getting that figured out. And long term, this is going to be a great lead zinc silver mine. The Gediktepe mine is operating nicely and paying us almost $1 million a month. That's gold, silver. However, that one has a shorter mine life. I would expect that one to be all mined out from the oxide zone in about 4 years. There is a deeper sulfide zone there where we have a 2% royalty as well. So that brings me to one of the key royalties in the portfolio, and that's Timok. Timok's the largest copper gold deposit ever found in the history of Europe. It's in production in Serbia. The producing counterparty is Xinjiang Mining. And Xinjiang correctly believe that the royalty that we have on that deposit is smaller percentage than we believe it to be because the royalty was not perfectly written, okay? And I don't blame Xinjiang for this. I bought this royalty. I didn't write it, so I'm not the one at fault. But I bought it for 200,000 Canadian dollars. This will turn out to be one of the best financial transactions in the history of the royalty business. So we put in our annual report. I'm not telling you anything that's not public, that those negotiations have gone smoothly, and we expect to have a resolution announced forthrightly. Of course, the market's not giving us any credit for that. I wouldn't expect them to. And you don't need to buy ahead of that, although if you buy ahead of that announcement, you'll do well. But you don't need to believe me. You can wait for the announcement to come out and then buy. But this royalty, I believe, is worth $1 US per share in our stock price. It will pay hundreds of millions of dollars over the mine life. This is an absolutely huge deposit, approximately 2 billion tons at a 1% copper equivalent. So it's a truly phenomenal system. And we found Xinjiang to be good folks to work with, and we believe we're having a nice compromise between the two end member interpretations, and that'll be announced soon. Okay, so these are the counterparties that make all this happen. We love having their money. I mentioned $40 million. We do business with the largest mining companies in the world, like Rio Tinto, all the way down to working with Chad in the back room here and helping him build a company, and everybody in between. There's probably a lot of different companies on that list that you may already be shareholders in. I want to point out that we've been in business 20 years. We only have 110 million shares issued and outstanding, 127 million fully diluted, and we have some great shareholders. SSR Mining Corporation, who we did a portfolio deal with, Newmont Mining Corporation, which is on my alma mater, owns 4.5%. They bought private placement with us. Paul Stevens is an aficionado of the royalty business, and Franco-Nevada, we're the only junior royalty company they've ever bought stock in, which says a lot. That says a lot. And our long-term compounded annual growth rate, 16% right now at today's share price. A lot of ups and downs along the way. My goal is to get that long-term compounded annual share growth in our stock price to be closer to 17, 18%. Yeah, I think that's entirely accomplishable and vastly better than the average performance of the S&P 500 or mining companies in general. And I'm confident we can do that with this business model. And one of the reasons why I'm so confident is because our cash flows are burgeoning. We've been building this company for 20 years, and now the fruits of that labor are coming in. And this is our increasing cash flow per share and overall adjusted cash flow over the last 4 years. And I'm confident that this next year I will more than double the cash flow per share. Appreciate your interest in the company, and we're always happy to answer questions.
Your questions, please.
I like this model.
We find, and you like it for good reasons, sir. Yeah, Metalla is a different model. They're buying royalties.
They have only two, gold and silver. You have a lot of another metals.
It's nicely diversified. It's diversified from a development standpoint, early stage to production. It's diversified from a commodity standpoint, And we're in 13 different countries, so it's diversified from a geographic standpoint as well. Yeah, and the bigger the portfolio, the greater the probability of that huge discovery being made on our property. So we can all do discounted cash flow and calculate what the portfolio is worth from the cash flow that we can see. But what will really drive the share price is a huge discovery within the portfolio. David Harkwell said to me one time, he said, some of our best royalties I didn't even know the name of until they made the discovery. It was just deep in the portfolio. Tarek, thank you. Yeah.